And in our top business story, Moody's has reaffirmed Sharjah's A3 credit rating and has highlighted its credit positive 2015 budget. Moody's Investor Services has confirmed that Sharjah will continue to enjoy a strong A3 long-term credit rating with a stable outlook. The rating agency's credit opinion highlights the Emirates' strong government finances with a very strong fiscal and government debt position, as well as Sharjah's diversified economic structure with a competitive manufacturing sector. And that the government's focus on education is supportive for the Emirates' economic growth potential. Additionally, Moody's highlighted the government of Sharjah's first public debt issuance, a $750 million 10-year sukuk, which reduced the average borrowing cost of the government and was more than 10 times oversubscribed by investors. The 2015 budget envisages a stabilisation in the deficit and a credit-positive trend. Abu Dhabi Terminals, the manager and operator of the Khalifa Port Container Terminal, saw its volume reach 1.13 million 20-foot equivalent unit containers in 2014, representing a 26% year-on-year growth and also setting a new standard in regional growth rates. The port operator gained a number of achievements in 2014 and has seen more than a 20% year-on-year growth over the past 5 years, which, according to a statement, is expected to be built on in 2015. Last year saw productivity rise to an average of 34 crane moves per hour, and the Khalifa Port Container Terminal named in the top 10 growing container terminals in the world. For December 2014 alone, the KPCT handled 132,339 TEUs, the highest number of containers handled in a single month in the Emirate, and an increase of 26.7% compared to 2013. Martin van der Linde, the Chief Executive Officer at ADT, was quoted as saying that 2014 has been the busiest year at Khalifa Port Container Terminal, and their achievements and success in 2014 proves the quality of their services and that they are delighted to be setting a new standard of excellence. Etihad-backed Jet Airways has announced its first profit in 7 quarters by 101%. According to a statement, India's second largest airline by passengers showed a profit of $500,000 for the 3 months to December the 31st, up from a loss of $46 million in the year earlier period. It added that total revenue rose by 9% in the quarter, while total passenger revenue was up by 8.8% compared to a year ago. The figures come as Etihad Airways and Jet Airways announced a long-term strategic alliance back in 2013, with Etihad taking a 24% equity stake in Jet Airways. And RAK Properties announced a net profit of 1,577 million dirhams for the financial year 2014, up 3.4% on 2013. According to a statement, revenues in the fourth quarter of last year were 297.8 million dirhams. However, fourth quarter net profit figures were not revealed. The company's total assets last year reached 4.7 billion dirhams, nearly unchanged from the total assets recorded in 2013.